rivers in the sun. And Gabe said, when Puerto Rico? So truthfully, we're going back to New York this Friday, April 5th. Surprise podcast. Can't say what it is, but I'll let you guys know probably Thursday. All right. Welcome back, everybody. If this is your first time on the live streams, welcome. I'm your host, Roy Dunia. We're going to be going through the Sunday market outlook where we go through Forex news. So we'll look through data releases for the week, see if there's any red flags, see if there's any speed bumps that we need to keep an eye on. We'll also look at some trade ideas. So I have a few swing trade ideas that I'm eyeing for USD pairs. And I'll show you guys, obviously, what we're looking at for NAS100, which is what I've mostly been trading. I haven't been trading as much as I'd like to because of how busy I am. But going into April, this is big money season. And so this is one of, usually April and May for me are some of my most profitable months. So time to lock back in. Excited to jump into futures and see what the hype is about. So this is going to be fun. We'll be doing it live. Okay. Here we go. When Miami, when Puerto Rico. So here's the deal. We're flying out. And I want you guys to comment what city you're in. Okay. In the description below. But here's how the tour is going to go. So today's March. So let's just call it April 1st. So here's our timeline. April 1st actually marks the first day of the NAS100 Masterclass. If you guys haven't grabbed your tickets, you got one more day. Link is in the description below. But April 1st to the 4th, NAS Masterclass. 5th, I'm also headed to 10X Growth Conference tomorrow Tuesday and Wednesday. If you guys are in Miami, you're going to 10X Growth Con, let me know. We'll connect there, meet in person. On the 5th, we'll be in New York, 5th through the 7th. And then I want to try to figure out an event in Miami here between the 7th and the 21st. Okay, because we have to do some personal traveling to go meet with sponsors and partners, so that's going to be separate. But between the 7th and the 21st, that 2-week period, I'm going to try to find out where we can host an event, probably at Tyler's. It'll be awesome. Make it happen. And then on the 21st, we're going to start gearing up for the Europe tour. So in case you guys are in Europe, here's the tour schedule for April, just so you guys are aware. We're hitting Dublin, April 24th. We're hitting Liverpool, Manchester, and London on the 25th. All right. It's a stretch for us to do it all day. So we were going to do 9 a.m. in the morning, Liverpool, 2 p.m. afternoon in Manchester, and then 8 p.m. seminar in London. Might be pushing it, but we'll see. And then ideally, we're going to do Lisbon, Portugal on the 26th. We're doing Madrid, Spain on the 27th. And some of you guys are thinking, what is this tour schedule? What is it for? Give me 1 second to announce the full dates, and then I'll walk you guys through it in case you don't know what the tour is about. And then we have, after Madrid, I think we're going to, I think it's Dubai, directly to Dubai on the 28th or the 29th. Yeah. We had 3 other cities that we're calling. We had Lagos, Nigeria. We had Cape Town. The thing is, for us to fit it into our schedule, it's going to be way too packed. Also, they want us to fly out to East Asia. Singapore wants us out there. Can't do it. All right. We just don't have the time. But we want to encourage everybody who is in Dubai or in the UAE to join us on the 28th and the 29th, because we'll be out there for the free seminars. Now, to explain what these are, we're trying to bring the summit to everybody, to give everyone a taste of why it's so important to get surrounded by success. We're going to bring some of the most successful traders in every city, and ideally, they're going to bring a few of people from their network. We're going to try to find some institutional folks to give it a twist. So we have the institutional side and the retail side represented, and ideally pack out a room, couple hundred people, 300, 400 people in every city, completely free. If there is a cost, just a heads up, if there is a cost, it's going to be something like $10, $15, $20 or 10, 15, 20 euros maximum, only to cover costs for the video crews and things that we might need in the local cities. Other than that, we're getting the venues, getting the whole team out there, getting all the right traders and the right, voices in these rooms to provide value. Free information, how to boss up in 2024 and make a whole bunch of money. We're going to have folks talking about automated trading, folks talking about just, you know, longevity in trading. So not just how to make the most money this year, how to stay in this game long term, because people do burn out, people do fall off. And so talking to veterans gives you a different approach where you start looking at trading as a marathon instead of a sprint. You dial back, take some of the pressure off, and then inevitably become more successful. So being surrounded by success, getting inspired, getting the education, can't miss it. This April, and then heading into early May, we're doing the first leg of the Euro tour. Put a one in the chat if we can close this right here. Move on to the Sunday Outlook. Put something in the chats, emojis, anything. Drag your hand, grab your cat, move the cat across the keyboard. Are we good? He said Boston, Massachusetts. Buddy, I'm talking about Dublin. I'm talking about money. It keeps coming in. You would think I'm Irish the way that it stays Dublin. You're talking about Ironton, Ohio? Are we having the same conversation? Josh, Gage, what are we doing today? Dubai dates finally locked in. I do have an announcement too. I'm putting ink to paper in the next 8 hours on probably the biggest contract of my entire life. The dates of the summit may be getting moved. They're going to be getting moved by 3 or 4 days max, but I will let you guys know if there's any change fees or any inconveniences with having to change y'all schedules. Let me know, and we will make sure to make it right with all of you guys. But new dates, November 20th to the 23rd, or 20th to the 22nd. Okay, it's not 100%, but we're about 97% of the way there. Appreciate the heads up. Okay, looks like we're good. Looks like we're good. He said, will this event be available virtual? Unfortunately, it will not. Now, this is a question that we've gotten, and let's be real, guys. Let me get a feel here. I am 100,000 million% against having a virtual event. Because the whole point of putting this together is it's like when you're there in person, it changes you as a human. You never go back. Guys, I put this thing together and I was still like, I could not avoid the impact that the event had. You're surrounded by so much success that you start looking at yourself. There's 3 things that can happen. You're either the kind of person that you'll see somebody and get so inspired by their story and their come up that you start to see yourself in them because they're relatable. And you're like, that could be me. Okay. First layer. Second layer, you see somebody and you're like, how the hell did this person make $100 million? How what? If he can do it, I can do it. It's fucked up to say, but that could be one of the takeaways. And the third one is you're just so fucking blown away. And you look at somebody and say, if I could just have 10% of whatever this person has built, I am more than happy. And they're giving you the answers on how they did it. What? So you can't run away from the influence of the conference, being there in person, the inspiration and the personal connection, right? Little avatar on IG. Hey, what's up, bro? Good to see you. But I don't know you. Right? Now, we go meet in person. Every time I see that bubble, guess what? I'm thinking about
your phone for you.
behind the bubble. Who the and wait, hold on. He says we can't hear you. Guys, is the audio messed up? What's up with it? Pops, you might have to turn up the Pops, it's called a volume. You got to turn up. There's a button on the side of the phone where when you click it, the sound of the volume gets louder, and you're gonna have to click that because I'm pretty sure you might have the device muted, Pops. That's crazy. All right, all right, all right. Let's get to it. I'm about to get in so much trouble. Will Summit 2024 be available for virtual viewing? Nope. Joe Dallas 1012 said I can hear. Clifton is in here. Me too. Man, okay. Awesome stuff. All right, so that's the live tour schedule. It's going to be a very busy April. If you guys are in Europe, put something in the chat. Let us know what city that you guys are in. We looked at the sheet that you guys filled out. Those were the cities. And yes, okay, I saw Lagos and I saw Cape Town and I saw Johannesburg. We're trying. We'll make that one work. Okay. Uh what? That's not cool. So I can hear you on the phone, but not the TV. Perhaps I'm messing around, man. I'm messing around. Okay, now this is a trade that was called on Friday, if I'm not mistaken. So let me actually go right here. Go chart addicts, stream 328. That's not cool. Whoa. There's 31, 29.
Something just wasn't adding up.
The market was closed, but I'm pretty sure this is the trade idea. Yep, there it is. How disrespectful. Do you guys see this? So we were looking at this trade, but the market was closed. I figured that we would do a quick 45-minute stream. Price was sitting at 18,271. That's where the price was when it was closed. Stop loss was at 247. So you guys can see price was sitting at 271 right here. Stop loss 247. And then the take profit was at 372, right? 18,372. Triple bottom rejection. So we can look at the 1 hour time frame. We had 1 hour support here, 1 hour support here. And if you look at these candles, every time it got here, strict rejection, big rejection, not a big rejection, right? It closed bearish, closed below these two candle bodies, but it stayed above that daily support. So as long as price is holding that daily support, sellers are going to try to break through. Liquidity is going to try to get grabbed through, but as long as the candles are closing above that support, then structure is holding. And that's exactly what we saw here. 1, 2, 3, 4. And then in 1 hour, actually, this was 30-minute, 15-minute, 5-minute. Look at the disrespect. As soon as the market opened, a 5-minute candle straight to TP. So then what do you do in these situations as a trader? You say, okay, trade idea was right. Obviously couldn't execute because it was not in my session. It happened too quick. So then we'll get back into the technicals here. I'll show you what's going to happen next with NASDAQ approaching all these previous highs, how we're going to trade the retest and continuation because it's still bullish. Even though we're at the top of the range, we're going to be expecting some kind of pullback. We're very aggressively bullish, and I'll show you guys what that looks like. Hint, hint. Here's the top. Here's the bottom. We're going to find some secret level. We're going to wait for the pullback. We're going to wait for the bounce and retest, and we're going to, all right? Stick around. I'll show you guys what that looks like. Forex Factory.com. I figured we'd actually go through some data today and see how the economy is doing. I figured we'd do a little prognosis on how the economy is doing. Can somebody tell me the difference between a prognosis and a diagnosis? Because I feel like I just used that one completely wrong. New air from Richmond, Virginia. Yo, shout out to Richmond, Virginia. New here from Richmond, Virginia. That's where we're from. I went to VCU, right? I lived on West Marshall. Shout out to VCU, but also Richmond sucks. That city fucking sucks. Oh, sorry. No, excuse my language. I apologize. Okay, Forex Factory. What a crazy week. So Monday, we're starting out light with some ISM manufacturing sentiment index. All right. Okay, keep that. Not interested. Jolt's jobs openings. How many open jobs do we have in the economy? 8.79 million. Seems like there's a downward trend here, and there is. We had 9.5 million open jobs as of October of last year. This is the November release, but it's representing the October numbers. So October, 9.5 million open jobs. Can't, let's do 955, right? I'm not going to forget those 50,000 jobs. Those matter, right? But then in 1 month, whether those jobs were seasonal because of the holidays or I don't know what happened, but tons of those jobs either got taken, and then we'll look at that data. No big change between December and November. I'm talking about the December and January releases, but these are dropping a month late, a month after the data. So this number here represents December's data. But then we climb back up to 9 million open jobs. That's probably seasonal because of the holidays. And then, of course, a little bit of a decline here, 8.86. Looks like we're looking at one more decline. And so we'll take a look later this week on Tuesday, probably right before the news happens. We'll take a look at the jobs reports for the last couple of months, see where most of the changes are happening to figure out if it's seasonal or if it's cyclical. And then if it's seasonal, no problem. Those jobs will come and go as demand picks up. But if it's cyclical, or if there is actually something happening, like certain amounts of jobs are getting taken quickly, maybe service sector is overperforming services are overperforming goods, maybe manufacturing jobs versus tech jobs, administrative versus government jobs. We'll look at the data and figure out where the numbers are missing and see where the discrepancies are. Wednesday, we have the OPEC meetings. OPEC is the mafia for oil production. They set the prices, they set the market, and they try to keep things under control and restrict pricing. So as to not create global panic over oil. These meetings are typically tentative. Tentative meaning they happen throughout the day. There's going to be large meetings between the top performing nations, then smaller sub meetings to figure out specific trade deals. But the most important thing to look at for the OPEC meetings is production limits. So in order to keep prices stable, in order to keep prices from going way too low too fast, they have limits on production. No one country can push too much oil into the market because that drives prices down. And so if Russia and everybody else is relying on, let's say, US oil being $70 a barrel, this is just an example. And let's say Saudi Arabia starts pumping oil into the market because they're trying to raise some money. That'll drive the price of oil down. That'll crash the economies of a lot of countries that rely on oil trade. If not crash the economy, that's a little severe, but if it like a 20% reduction in oil or a 20% reduction in oil or 20% reduction in price of oil for a country that's majority of its exports is oil is like a 20% reduction in GDP. It seriously hurts countries. And so they have this agreement with each other. It's like a gentleman's agreement not to pump too much, not to put too little, and then, they're figuring this out. The big topic here is Russia is trying to circumvent the oil production cuts. Instead, they're just not going to export as much of the oil. So they're still going to pump as much, but they're just not going to put as much out into the market, honoring the gentleman's agreement, but continuing to stockpile for when they're able to push that back out. Or maybe they're going to sell it out the back door to some sketchy countries. We don't know, but that's the topic for the OPEC meetings. Fed Chair Powell is speaking on Wednesday for what? Stanford Business, Government, and Society Forum. I don't trust either of those three things. I don't trust Stanford's business school. I don't trust the government, and I don't trust society. I don't trust anybody. I might just be paranoid. Who knows? Okay. Then we have, let me see. All jokes, people. This is all comedy. We have the ADP non-farm employment change to the weekly number. We have, remember, Barkin is speaking at, hey, for Greg, right? Greg, this is your first time on the stream. Barkin is speaking at the Home Building Association, right? The HBA in Richmond. Audience questions expected. You might want to pull up. I'll give you a list of questions that'll stir the pot if you don't mind taking one for the team. But make sure you have your location services on. Keep an air tag on you in case they snag you. Okay, jokes, all jokes. Again, this is all comedy. I'm just a guy on a screen. Outlook on the virtual executive briefing hosted by Global Interdependence Center. Tell me that doesn't sound like a front or a shell company. Global Interdependence Center. Federal Reserve Bank of Cleveland President Loretta Mester will be speaking at the virtual executive briefing hosted by the Global Interdependence Center. Get the fuck out of here. I'm sorry. All right. And then we have NFP first Friday of every month. Employment numbers coming out. Expecting no change, 3.9%. So this is actually the best data release to go into. And I'm not going to do this. Guys, look at how they do this, right? This is why the government sucks, right? That's why the government sucks. Look how ugly this shit is. You telling me they can print $85 quadrillion for just to leave the equipment in Afghanistan. You're telling me they can print unlimited money for the rainbow flags for anything, but they can't get a better font than this. This is what they can do. Got fucking Steve Jobs rolling in his grave. Okay, so because of this horrible user interface, we're gonna go to the one step better government website, the St. Louis Fed data website. And we're going to look at the unemployment rate right there. Mike, am I lying or am I telling the truth? Because we are here laughing your ass off on the floor. I'm being 100% serious about that. And look, right? I've worked in the government. Right? Some of you guys just got an uneasy feeling when I said that. Nah, relax, okay? I was an intern. I was a legislative assistant, couple congressmen, whatever. When I tell you everything is outdated, it's got to get revamped. If you guys listen to the most recent podcast I had with Dr. Richard Olson, he says the same thing. Or no, actually the first podcast we have. He was going around to the different banks in Europe and they were out here with filing cabinets and all this stuff. He was like, buddy, have you guys heard of a computer? And changed their lives. Had this interconnectedness, all this stuff. Forex trading popped off for the banks. Are you telling me they were out here? They couldn't even communicate. There was, if you smudge somebody's paper and the sweat from your bank teller hand smudged that piece of paper and messed up somebody's deed to their house. That was happening in the year 2000, in the 21st century, if you people can believe this. All right, that's my rant about about how old government systems are. All right. Happy Easter, Shadbin. Yep. Is there volume in the market today? I don't know, right? But I would say it's a Sunday, it's Easter, so just chill. You think there's gonna be movement? I mean, there's definitely volume in the market. These last 15-minute candles just completely hit TPs, but everybody who saw those moves is feeling FOMO and is going to chase. You're going to get hurt pretty bad. So I would advise caution. Tomorrow for indices, with it being Easter Monday. So there's going to be a lot of bank closures tomorrow. If the market moved 140 points in 30 minutes of market open trading on a Sunday, like, yes, even if it's a holiday, you can expect moves because this entire week when the market was consolidating, there was no holiday. And then all of a sudden, the last 30 minutes, I guess it's a holiday, yeah. And so on Easter, that's when it finally moved. So you can expect volume, but it's just very wonky. It's very unexpected. Guys, there's no rush. And gals, ain't no rush. The market is not going anywhere. It's like eager to catch the next fish, eager to catch the next fish. The ocean's going to be here tomorrow. Matter of fact, here's a little one for you. And I hope this doesn't shatter your bubble. The ocean's gonna be here longer than you, right? So chill. And same with markets. It's gonna be cockroaches, markets, and then Uncle Sam with the tax in his hand. Those three. Nuclear apocalypse happens, cockroaches, markets, and the dude on the late night TV commercials who's always trying to sell you the sponge for 1888. That dude's gonna make it. For a fact, he survives. Milad, happy Easter to you. Okay, let's see what else we got on the itinerary here for the week in terms of news. Okay, NFP, and that's it. Pretty banger week. Talk about volume. Yeah, save your ammo, people. We got a pretty high volume week in front of us. Control, copy, and paste it into the chat GPT and ask for a summary. Joe Dallas, what is this? What do you think this is? What is this? What is this? Amateur hour? What am I, an amateur? This guy talking about put it into ChatGPT and summarize it. I'm roasting the government for having poor taste in user interface. I'm not talking about I can't read the I've been reading government data till my eyes bled since I was 16 years old. Right? Everyone's like, Roy, how did you find it? I'm like Michael Burry. I might have Asperger's. Who knows? I'm really reading through this stuff and I'm really saying to myself, you're telling me that the Bank of Japan is going to have negative interest rates for 5 years. Now, clearly, I'm not as smart as Michael Burry because I didn't catch. Right. I'm not 5 billion deep. But I was sitting there 4 or 5 years ago, looking at the Bank of Japan going through negative interest rates, thinking to myself, the rest of the world is not doing negative interest. In fact, they're going to start to raise interest rates because of the inflation problem. And you're telling me Japan's going to keep doing what they're doing? And so I've been going long USD JPY for like 4 years. I've been shorting Euro USD. Some of you guys have been in Chart Addicts around the same time that I've been shorting these instruments. Now, I haven't caught a trade on them in like 4 months, and I'm looking for my entry. But just to show you, like, yeah, you gotta be in the game. I don't even know where I was going with that. Where was I going with this whole thing about doing the data and the research? Oh yeah, I wasn't roasting that I couldn't read the data. Let me get back to that. I was just cooking the government for they spend 25 trillion quadrillion dollars on you know what I'm saying? Trying to figure out just plants and trees or whatever, carbon. Can't fix the Bureau of Labor Statistics website. Somebody in Pakistan will do it for $200. They spent 75 quadrillion dollars trying to misgender trees. And we can't have a good website. That's all I was saying. All right. Too far. Let's go right into this. So we have historically low unemployment rates. To give you context on what that means. First off, in case you don't know how to read this data, the gray bars are recessions and the line represents the unemployment rate. So if we look right here on the left, we have the unemployment percentage rate. So this is the percentage of people who don't have a job in America. And then on the x-axis, we have the years. And so what we look at is when things are really good, the unemployment rate is anywhere between 2 to 5%. All right? And really, it's anywhere between 2 to 4%. Right before recessions, and this is what I want you guys to pay attention to, since the 50s, right before recessions, typically we have record low unemployment rates. So over here, we have 3.5%, and then we have the gray line, which represents a recession. Then things start to bottom out, things start to chill. A couple years later, low unemployment, meaning the majority of the country has a job. Everyone's got a job. And then little recession, and then the unemployment rate climbs to 6%. Then it cools off, and then it climbs. Then it cools off, then it climbs. And then it cools off, and then it climbs. Okay, so this is the cycle that we've been following. In the year 2000, right before the tech bubble, we had 3.9% unemployment rate, which is exactly where we are today. And then we have this massive spike. This is the tech bubble of 01. Tons of .com companies started to go out of business. Fed stepped in. They lowered interest rates to stimulate the economy. And then the unemployment rate slowly started to drop. In 07, 08, we had the global financial crisis or the great financial crisis. And that's when unemployment jumped to around 10%. This was about as bad as we had seen in recent years. Okay, there was 80s and then there was the '08 financial crisis. This is where people were outside of the Wall Street buildings with boxes in their hands. Government agencies were going out of business. Government funding was drying out for tons of projects. This was a pretty tough time for America. But we actually swallowed the medicine. We did step in with quantitative easing, but it was very light. Okay, the first three. And then that happened. This was kind of like the playbook we ran for 14 years, which was printing money by the Fed, quantitative easing 1, 2, and 3. And then we also had record low unemployment or record low interest rates at 0%. So you can go borrow money from the bank for free. No, not us. The banks could go borrow from the Fed for free, come back out to us. If you're a prime borrower, meaning you're one of the best credit-worthy borrowers at the bank or one of the best clients, they give you the prime rate. And then if you're somebody else, depending on your credit, you get the prime rate plus whatever little tax they want to add on top. But it was still pretty cheap. Then COVID happened. Right before COVID, and this is why Trump kind of takes a lot of credit, because in 2016, the unemployment rate was at 5%. Okay, so we're talking about not seven, yeah, we're talking about 7 or 8, we're talking about 8 years after the great financial crisis. The market still hadn't, or the economy still hadn't fully recovered because most of the manufacturing jobs had gotten sent overseas, which really hurt the labor market here in America. This was a policy to try to cheapen the price of everything and try to reduce pricing. Instead, we should have kept the jobs here. Anyways, Trump gets elected 2016, brings the jobs back in. Manufacturing takes a giant leap forward. Jobs are created. That's why they were kind of flexing the jobs thing. And then they were like, oh no, things are looking really good. 3.5% was about as low as we hit here, maybe around 3, 4. Then COVID happened, and this was the highest unemployment rate we'd ever seen, ever. 15%, everybody was at home. Since then, we had to do emergency measures. Trump stepped in, 2020 got kicked out, and then Biden and the Fed has been keeping unemployment pretty low. So this is why when people say that the economy is doing good, it's not because prices have gone back to where they're supposed to be. It ain't because everybody's making money off JPEGs again and, we're all living the dream. But if you look at the data, historically, we're sitting at record lows. But if you guys have been paying attention the past 10 minutes, whenever we're sitting at record lows, it's only a matter of time before something cracks and unemployment starts rising. Now, if you guys remember what Jerome Powell said on the stand, he said, we're expecting a rise in unemployment. Right? So we're not going to start cutting rates unless there's something unexpected. So and that's why they started asking him. I kept saying, good question, when I was interjecting, because they were trying to pin him on Buddy. Like, what are you guys expecting? Because right now it's teetering at 4%. I would say around 4.2, 4.3, 4.4, that little range of 4.2 to 4.4% unemployment. That's where the Fed should be stepping in. But they're saying they're expecting a hit. All right, buddy, we're at 4%. How much higher are you thinking this is going to go? What are they expecting? 4.5%? Why is it important? Because I look at early indicators. I'm not going to sit here and wait for price to move to be like, oh, yeah. Oh, shit. Well, damn. I wonder why it just shot up. Because the unemployment data was still good. Right? Now, if the Fed is expecting 4.5%, or 4.8 or whatever, that means that there's no rate cuts. If this thing comes out at 5%, let's say like way too many people are losing their jobs. The Fed is like, this is way worse than we expected. We expected a little hit, nothing like this. Then they will cut rates. That's when the stock market will absolutely fly. And then obviously there will be a correction, but that's what the markets are waiting for, the Fed pivot. They want the Fed to cut rates. They know it's a matter of time. Okay, ladies and gentlemen, put a 1 if you guys were paying attention, put a 2 if that was too boring for you, and put a 3 if you're ready to get off scot-free and just, I don't know. Are we good? I must say, I feel at home here. Salim, good. But don't get too comfortable, right? Because I would put you on skates. Everybody, be paying attention or not. If you're paying attention, you're going to have the best time of your life here. You're going to make tons of money. You're going to learn a strategy and be like, this guy is giving this out for free. If you're just out here in one ear and out the other, I sound like a very loud, fast talking person on another side of a screen. Do you understand me? I don't know much about you yet, but of all the YouTube traders, you impressed me with the knowledge. All right. Well, I appreciate the kind words. Joe Dallas, 1012. All right. Quick reminder, NAS100 Masterclass starts tomorrow. Grab your tickets. Link is in the description. Okay. I'm going to go through this pretty quickly because I spent a little bit too much time on the fundamentals, but let me give you guys a little bit of sauce here. Okay. I don't want to lose that. You guys ever notice how the market only moves three ways? Bullish markets, bearish markets, or sideways markets? Okay. Now, this is something that I teach in the NAS100 masterclass, which is that in a trending market, you still have pockets of consolidation in the trend. And if you can find these areas, you can find the best discounted prices to trade with the trend. What the hell does any of that mean? So over here, market sideways. Over here, market go up. Obviously, a little liquidity grab first. Can't forget that. So what happens along the way is the market does not move in a straight line. The market moves in waves of impulses and corrections, impulses, corrections, impulse correction, impulse correction, impulse correction, etc. And so the whole goal is everybody who tries to buy it during the impulse and then puts their stop loss anywhere here loses money. And then anybody who knows how to spot these discounted prices makes money. Now, you don't have to be perfect, but you do have to be generally accurate. And so this is the entire game, is that people will miss the first part of a move. And so they'll start to buy it late into the trend. And then they'll have little miniature stop losses. And then the market will start to correct and will kick them out of their trades. They panic and start to sell, only for the market to continue in their favor. And this happens over and over and over. So your job in a trending market is to find these discounted areas where the market creates several points of contact, and then to trade from those discounted prices as best as you can. Now, sometimes when price establishes a discount, you get these very aggressive swings through the zone, which is to be expected. But if you can spot the area here, you can find re-entry opportunities when the market retouches those same zones. Okay, so you have touch, touch, liquidity grab, touch, touch. You have plenty of opportunity to re-enter. Same here. We have touch, touch, liquidity grab, touch, continue. And it just keeps going. So your job is to basically find these pockets, buy low in a bullish trend, and then obviously use a day trading strategy so you can be as accurate as possible. So the market's been aggressively bullish. We have started to slow down in volume. So you guys notice how this is very, very clean. Not a lot of retracements, very straightforward price action. Same with this right here. Equal size moves, small correction, and then it keeps going. Since these, and you can kind of put this one here in the same category, very big aggressive moves. We've kind of been chopping in this channel for a while. And so two things are going to happen here. Whenever the market is pressure cooking, it's going to blow to one side and then continue, or do the opposite, blow to one side and continue up that way. So playing in this channel is effective because when you can start to spot 1, 2, 3, right? 1, 2, 3, 4, 5, 6, 7. When you can start to spot this, it becomes very addicting to want to sell it every time it hits the top of the channel, which is a very rational thing to do, by the way, as long as you keep in mind the liquidity grabs. But at some point, there's going to be an aggressive move. And I feel like let me correct that. There's none of this I feel like. Generally speaking, whenever the longer the market pressure cooks inside of a channel or inside of a wedge or inside of a consolidation range, you're going to have the fake out to one direction and continuation. So how this looks for a consolidation here, it goes sideways, fake down, and go. How it would look for a wedge. Consolidation, fake one way, and roll. Same with the channel. You would do a fake one way and go. There's also the second option where in a channel, if the market is very aggressive, which I believe it is, you could just have a straight break to the upside, and then the market will just establish a whole new trading range all the way up here. Okay. This is the big picture. I just wanted you guys to understand what's happening on the higher time frames before we jump into the local price action. For context, you guys know that word context? Okay. So we're coming off this area of consolidation here. We had a liquidity grab to the downside, little break and retest, W's for the win. If you know, you know. Nice impulse to the upside. And then now we have this flag correction. So as I was saying earlier, we had this break right here where price established support. Price had established support. We had 1, 2 touches right here. So I was expecting either a retest of this level or just price to form support right here at that same 18,271 from last Friday. Last Friday, we did a quick stream because the markets were closed. This is the same exact trade. All right. In the first 5 minutes of the session, market hit TP 4.9 to 1 R. As crazy as that sounds. So let's take a look at what we have here. This was the new support. Market has broken above this structural high. And then now we're creating a perfect double top at this structural high. Being accurate matters. When you get in here and you get surgical, if I take this line and I draw it all the way to the top wick, and then I grab another line and I draw it to the body, okay, we have this zone right here. This is typically where we draw a box because it incorporates the wick to the body. Let's make sure that we extend this to the right. So do you guys notice that the market does not make any coincidences? Here's the previous high. Here's the rejection. On the 5 minute, that's a real rejection. These higher time frame zones, they tell the story. And so the reason that waiting, and then let's go left as well. Guys, the markets leave clues. Markets leave clues. Markets leave clues. Okay? Now, once the market has touched 3 times, like once you have 1 touch, 2 touch, the third touch, I'm a little bit less trusting of. Because everyone's like, oh, I missed the first 2. I'm going to get in on the third one. You guys ever been there? You know, you guys ever been there? Oh, the market thinks it's slick. Oh, I'm going to catch it. Makes a little bit of a dip, shoots up to some unknown level to most people who just don't understand what's happening in the world. Okay? Now, Chart Addicts members, let me know in the Zoom chat what level sits right here. And if you can show me a markup or actually find the exact price, you would be a legend. But what is happening up here right above this support or right above this resistance that could draw price to that area before we see the retest? What is happening up here? Amanda, you should win a Mensa level IQ. This is a Nobel Prize, Nobel laureate level answer right there. That's what I'm talking about. We're sitting at resistance. We have the premium right above it. We're looking for that golden level. We're looking for that zone of zones, right? We're looking for that key level of key levels sitting right above. And Bobby said 18,687. 86.5. My boy hit me with the 4 decimal points. My God. You guys can't see it. There's a tear coming down my eye. All right, I am getting emotional. And the thing is, I don't even have to check. That's how much I trust my people. I don't even have to check. I trust Bobby. That's how much I know my team. All right, so he said 18,686. Stop playing. 18. Wait, is it 686 or 486? Oh, he said that's the Apex account. So I'm guessing that's different. That's a different price than we're looking at here on Oanda, right? Y'all gonna make me pull it out. Okay, for everybody watching at home, okay, you can take a sell at this level at 461, but don't sell against the trend. There's liquidity sitting right here. So let me tell you guys exactly what's about to happen since people say they can't predict markets. Or like, Roy, you can't predict markets. No, 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 no. No, 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 no. No, 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 no. You can't predict markets. You can't predict markets. Watch this. So here's what's going to happen. People are going to load up short positions at this level, much like what happened here. The market will actually drop just enough, maybe even to this previous high. Oh my God, perfect. Resistance turned to support. This is the one. Okay? And then they will short it. And the greedy people who missed the prime entry because they were too scared to enter when they were supposed to will load up shorts as the market is dropping. And as the market enters this zone, people, I hope you're listening up. As the market enters this zone, you're going to have this massive liquidity sweep straight to the upside. And that's when everyone's like, oh my God, I knew it. I shouldn't have been short. I should have been long the whole time. And what are they doing? Right? Break and retest trading, aren't they? They're break and retest trading. They're buying up right here. Oh my God, Roy, I'm just gonna buy it right here, and it's gonna go to the moon. And all I have to do is put this little skimpy stop loss because that's how life works, right? It's all rainbows and sunshine. Skimpy stop loss season, right? Oh, skimpy stop loss. How many of you are going to use a skimpy stop loss this week? Put a 2 if you're going to use a skimpy stop loss. Put a 1 if you're going to let the trade breathe and give it an effective stop loss that's appropriate for the trade. Put a 1 if you're going to do it right. Put a 2 if you guys are going to be like, oh, 1 pip SL for the win, just so I can put a quadrillion lot or 10 trillion contracts on it. You can't. Slow and steady. Okay, so everybody who's going to be break and retest trading at these levels, expecting price to make a linear move to the upside, is going to be very disappointed. So we're going to have a liquidity sweep into the 461 level. Is going to create a little bit of support, just enough to give the baby pips traders a little bit of hope. Oh my God, yeah, we're getting ready to go. And then even worse, the people following the people who are following the people who are following the baby pips traders, they're entering late because the baby pips traders even missed their own break and retest entry because they couldn't even get that right. And then all of a sudden, sweep. Sweep to where, Roy? Sweep to where? And I'll tell you, as soon as we have a break of this level, we will have established a new range. Okay, so I'm going to walk you guys through this in about 2 seconds now. Okay, top to bottom, extension sitting just above the 886. Okay, and we have okay, boom. Market breaks above the previous highs, comes back in for the retest, and then launches to the 88.6. It also hits this extension level, but it might come in between this range. Again, we do zones and not lines for a reason. And so if we're going to talk about a zone between 461 and 480, this is on Owanda's chart, so you guys can go and reference this. It's only 20 points. It's going to hit that zone. And I'm saying all of this so I can come back to the receipts later this week and say I told you so. Come back in, break through the liquidity. As soon as we break back above 388, I'm waiting for that second retest to launch. I'm waiting for this. The exact zone, if you give me 2 seconds, I got you. Link is in the description, right? 365. Sorry. 347. All right. Roy, what did you just do? Here's the numbers. Bing. Bing. And what else? That's really all we need, right? 2 levels. So matter of fact, forget everything I said. Draw 350 and 466 on your chart or 461, excuse me. 461 and 360. Double check this. Or sorry, 350, my bad. Okay? I just did all that to tell you this. All right? Aren't you guys impressed? Is that or was that just what? All right, how about we do a party trick? Nope. Doesn't line up. If I go here and here. Yep, that's right at neutrality. Right in between the discount and the premium. Right in the middle. Sits at the 71 between this high and this high. All I'm looking for is a break above. Then we have the bullish continuation model. Whatever. All right. Just here's the zones. Right. We're gonna do it live anyways during the week, so it don't even. Right. Just a little bit of education. Cool. Okay. The rest, let's see what we got. I'm gonna make this pretty quick. UJ still sitting at that final TP. Will we ever get a retest? Here's the zone I'm waiting for re-entries for UJ. Don't ask unless you're a ChartAddicts member, then ask in the group chat, and I will do my best to respond. We're looking at 149. Okay, so I just want to see a pullback to 149. Am I doubling up and layering fibs? This might be crazy. Oh, damn it. I hate when this happens. So we got two potential zones sitting about 50 pips away from each other, around 40 pips. And either of them are plausible. So what I would do in this situation is layer and scale, or just enter one. This is the only time I'm allow this, right? Skimpy stop loss. At the first one, if it tags and hits your stop loss, you get kicked out, then re-enter, but with a full position at 149. So anywhere between 149 and 149.5. The market is on its third phase. ChartAddicts members, you guys can see phase one, phase two, and then now we're just looking for, well, this is a tough one. Huh. Here's the direction of the first moves. We got Bing. Now, to be honest, we have a beautiful expansion, closure above the previous highs. Yes, we're at previous highs up here on the higher time frames. That's why I'm expecting a correction. But I think that once we establish a higher low, we'll be ready to go. 149 to 149.5, 50 pip range right there. Bitcoin's still moving. We're back above 70K. We're at 71, potentially going to break the new all-time highs, which is 73,900. Insane. Bitcoin halving is at 416, so that's in about 2 weeks. Ideally, we're going to go sideways here, have a little bit of a move down, and then ideally at 60K or maybe lower, we start to see that big push in the second half of 2024. This, ladies and gentlemen, is the end of Q1. So congratulations to all of you. The magnet indicator, super secret magnet indicator, does not lie, cannot fail. Undefeated, undisputed, best on this side of the Mississippi and the Rio Grande. Greatest indicator of all time, found only on this stream. All TPs hit. Magnet was too strong. It happened, people. 2-2, 2-2, got smashed. First target, 2195, destroyed. 2-2, 2-2, destroyed. Because I said I wasn't going to curse, I'm going to let the meme do it. Magnets, meme, okay. Wait. All right. Can we all acknowledge? Can we all? I can't spell. All right. There we go. Right? right? Guys, come on. We've been talking about this gold trade for God knows how long. We broke all the levels. It smashed. The magnet was just too strong. It was too effective. I'm sorry. And just for the chart, just for the CA members, we had that little phase one right here. We had that phase two pop off, come back, 8 8 whoa, quick entry. Oh my God. Break and retest to the 78. You're telling me we got a double bottom at the retest entry right here at the next bit, like a Stairmaster extreme? No problem. TP1 gets smashed. TP2, it raced to TP2. Couldn't even wait to hug it like a sibling, yeah, like a family member you ain't seen in years. That's how fast it ran to the magnet. Came back, created support at the 61%, continued closure above the previous high after a little bit of problems here. The magnet was effective. It was so effective that it got stuck. But eventually, when price is on a mission, it's on a mission. Where was it on a mission to? Because let's keep in mind the second magnet price was 2222. Did we have any reactions, rejections, or retests at 2222? Yeah, we did. Let's look at the 30-minute first reaction, second reaction, third, fourth, fifth, sixth, seventh, and then eventually the market was on a tear. Magnet does not lie. 2222 got smashed. Now we're headed up to potentially the next extension level at 2267. And this is where we'll probably be establishing a new support for price to play at. And that's where we can look for a new low and a reset of the market cycle. Yup. All right. Is the dollar still bullish? Yeah, it is. Magnets, don't. Oh, I'm sorry. Let the meme do the talking. Let's keep it cordial. I stand by this meme on a religious level right now. Okay? Magnets. 104.5 got hit. We're hugging price again. Does price love the magnet zones or what? The answer is yes. That's a rhetorical question. That's where you ask yourself, answer yourself at the same time, and you ask yourself the same question. Rhetorical questions is kind of like talking to yourself, ain't it? Isn't that a little wacko? Isn't asking rhetorical questions technically make you a whack job? Guys, are we gonna have this conversation or not? Is asking rhetorical questions make you a whack job or not? Say W or L take on that one. My broker only lets me trade one lots on indices. That's because they don't trust you, right? They don't think they can't trust you with leverage, bud. Looking for 1-to-1s and 1-to-2s this week to BH. That's every week, my boy. 1-to-20s only. You're out your noggin. I trade futures, so got different prices on my chart. It's gonna be the same price action. So just adjust the differences between my price and your price chart. Would you short at its current spot? This dude Cesar has not been paying attention for shit. Buddy, what have you been doing for the last 30 minutes? There's a gap on my NAS chart. Well, look, man, sounds like between you and your broker. Are you saying short the NAS right now? Bro, I'm gonna go play in traffic if another person talks about shorting NASDAQ. You do not come onto my stream talking about shorting NASDAQ ever in any way, shape, form, or capacity. Are we clear? That's just that simple. If you guys want to have one rule of thumb, it's so hard to read this guy. I don't really know what he wants. What do I say in the chat? Here's an easy one. Just never talk about shorting NAS, and I promise you'll avoid 99% of the issues that come with being in the group chat. Like Jensen, if I didn't have any morals, if I was a dickhead to my core, I would have just told these people to short NASDAQ. The people that paid attention would have been like, yeah, obviously he's trolling. Everybody else would have done it, lost money, and ideally learned a lesson, but probably not if we're going to be real. Let's be completely real. Would not have learned jack diddly squat, and I would have just led a bunch of people to slaughter, and I can't live with myself. There's no gain there at all. No lesson was learned, and I'm just a dickhead, right? There's just nothing I can do. He said full margin. I should have told him to fucking send it. Go to your children's college fund and grab it. And let me tell you right. So no. That was a joke. Satire. Do not do that. I was joking, people. We are now back to being serious. Welcome back to the live streams. Relax. Right? Don't do that. I feel like I have to fucking 88.6 all the way. Price action is king. And in case anybody wants to talk shit about my boy Big Lou, the teacup work it, bro. I don't even know if this is a teacup, but this looks like a teacup and handle. Joint popped off. What are we going to do this week? Allow price to establish new structure, smaller time frame structure here locally. Wait for a pullback, ideally to the same exact zone, 39,750 on US30. Wait for a retest for buys. No, no, no. Close call. I hate having to redo my settings on the session indicator. Every time I accidentally delete my indicators, I'm out here Control Z, or Command Z. All right, so you guys see we have beautiful impulse to the upside, nice correction, multiple rejections to establish a floor. So this was a floor that was established here. That's why I drew that line. We have this little temporary floor here that became resistance. That's why I drew that zone here. And then we have our new floor. So we have a consolidation range. We have an impulse to the upside. I'm looking for a correction back through the support, back down to 39,650, potentially to 7. Like there's a whole zone here. If price creates just a higher floor, then we can trade the higher floor here. If the market breaks these lows, then we can look for the extended zone at 650. So 750 option 1, 650 option 2. All right, that concludes tonight's stream, ladies and gentlemen. Hit the like button if you wouldn't mind. Actually, just hit the like button regardless. And yeah, happy and safe trading this week. Don't blow all your chickens early in the week. I want to say be cautious. You're here. You guys are traders. You're not at a farmer's market. So sack up a little bit, but also don't be reckless. Okay, there's a difference between certainty, confidence, and arrogance. Fine line. There is no certainty in markets. You can be certain in the rest of your life, just not in markets. Confidence comes from having seen something happen over and over again, understanding your system and how the markets work, having a clear understanding of what you are looking for and what you are looking at all times. And if you do those things, you can avoid arrogance. Okay, so certainty, no room for it in trading. You can be certain about what you will do. I'm certainly not trading today. I'm certainly not entering more than this many lots. I'm dead certain about that. I'm confident that the market's going to go in my direction, right? Confidence comes from experience, comes from doing, comes from seeing it over and over. And arrogance says, this next trade has to win. Yeah, wait till you find out. Okay? So play in the confidence realm. That comes from repetition. That comes from back testing and seeing the markets move. And if you truly are doing the work in your back testing, you'll know how the markets move. If you're skipping the back end work, that's going to lead to most of your technical analysis problems. All right. Happy, safe trading, y'all. Crush it this week. I believe in you. And I'll see you guys every morning. Click the link in the description for access to the NAS100 masterclass starting tomorrow. Peace. All right, everybody. Great stream.